SOFI update here on the first after hours. Tough day out there. I didn't sell my options at the very start of the day. I sold a little bit, but I didn't sell all of them. I wasn't expecting a whole day of just straight down to 573, and I don't think anybody else was too. That was just kind of ridiculous that we sold off. Let's see, 647 down to 568. Sold off almost 12.3%. We sold off 12.3% intraday, and the market, at the same time that we were selling off, the market was bouncing. So that was just blatant manipulation right there. Nothing else to say about that. But I think it also has to do with the Fed. The Fed tomorrow, if they're dovish, then we should see. Let me get rid of this Bollinger Bands. So if they're dovish, we have ABC A, B, ABC right here. So that's one move right there. Overall A, I'm going to remove these. So if this is the A wave and we made the B wave, on the last video I talked about possibly hitting 584. Well, we went past that. So we've retraced all the way to past the 0.38 fib. So I guess it's pretty normal consolidation for a B wave overall. And if we look at it on the smaller time frames, clearly a corrective wave. We got ABC, and so it should be close to finish. The 1.61 fib of, we hit that perfectly, and we came up a little bit at the end of the day. We also hit the very top of this, pretty much a gap fill, and hit this support area right there. So it's looking pretty good for consolidation, actually. The more I look at it, it was just kind of frustrating the way it happened because we gapped up, and within a couple minutes after the market opened, we were already down to $6. We came back up and then just straight walked down the whole day. So it was kind of annoying how it worked out, but it actually looks like it could be just normal consolidation. And it really depends on the Fed from here. But if we get the okay from the Fed and they're dovish, then I'm going to expect a move to 781 would be my target. Potentially the 1.23 fib also, which is at 696. And the last target I would give, we're at 567. Probably something like 738 as well. So basically anywhere, this is like pretty much right in the middle. So anywhere in this from 696 all the way to 782 would be my target. And if the Fed's dovish and the market keeps on going on a run, then this could either be ABC and be finished and we go down after that, or it could be, I'll leave that on there, could be AB, C, and then we pull back and then go even higher. So that could be into year end too if they're really dovish. I kind of expect them to be. So I guess we'll see, but I expect them to be pretty dovish tomorrow. And I think really the only thing you need to worry about this week for targets is this right here, 695 to 781 if they're dovish. That should happen based on earnings today. I know there's a lot of options and stuff, and if they're dovish, that means stocks are going to be all popping. So I don't think the options chain is going to have that much effect on us if that happens, because you're going to have every stock and the overall market going crazy. They can't hold us down for that earnings report. There's no way they can hold us down. So So 696 to 782. All right, let's go over the opposite scenario. The opposite scenario is if they are hawkish. If they're hawkish, then I would be looking at this. I would be looking for this move to be finished after another move down. So I would be looking for A, B, C, A, B, C. This would be the B wave, and this would be the A wave. You can ignore the D wave. That's for the expanded triangle. We look at A, B, and then we can draw parallel line. Whoops. And I would be looking for, let's see, we went to 648, top was at 853, so about $2. I don't think we're going to go $2 lower than this. But I think we'll make a new low if that's the case and the market actually sells off. Despite good earnings, just the way that the market's going, the way we sold off today, we'd probably end up, if they're hawkish, it's probably going to send SPY down to the lows of the year. And so that would send us down here, and I would expect that to happen pretty quickly. But the good news is, if it did happen, that would be the bottom. That would be the absolute bottom. We have A, B, this would be A, B, C, and that would be the end. We'd be going up after that. Targets, I would say anywhere from, I would say the 1.23 fib would be a good target based on the chart. I don't think the 1.61 is even in play. It's too low. Maybe, but not, no, I don't think it's in play. 336, probably not going to be in play. So I don't even really see the scenario as, I'll give it like a less than 5% chance of happening right now. It's possible if we bounce and then in 2023 we have more rate hikes, or they decide they want to reverse again to come back down here. But the most likely scenario right now, I would say, is we pull back today and we're going to see higher after the Fed speaks. So hopefully everyone made some money today. I didn't take my profits properly at the open, and it cost me, I was up like $1,500 and I just didn't take profit. And that's what happens when you don't take profit. You got to take profit when you have a chance. So that's pretty much it. I'm looking for the overall market to go higher too. Look for 696 to 782 as a target for the next move higher. This B wave should be finished. So I will put out an update if we start moving higher again. And yeah, probably tomorrow night I'll put out an update. All right, have a good night.